So hello guys, welcome back to another session of this back test. Okay, and let's see what is going to happen. Okay, let's revise the all the analytics. Okay, so we were up around 8%. Okay, and our win rate has increased from 30% to 37%. Okay, see, the more trades we take, the more we are going to the near exact value, because to take out the luck factor from the trading, we have to get more and more sample size. Okay, so more will be the sample size, lesser will be the dependence of the variables on luck. Okay, so these particular green dot, they are just telling us that how many trades we took so far. Okay, so these are like, in January, I started this thing in January. Okay, so 2 days gap, then yeah, we have to be more and more consistent towards our back testing. Right now the win rate has increased 37%. Okay, see, we are just learning right now. That is the reason the win rate has started from a bottom thing and then it has started to climb up. Okay, we at least need 1 year of data to actually get what is our what do you call it, mm, yeah, the real analytics. Okay, so 8% up, somewhere 8%, 36% is the win rate, somewhere 37%. Okay, and this is the last trades. Okay, so let's see what is going to happen. Okay, we have been seeing a profit of 75, 75, 75, 49 for 60. Okay, so actually I forgot to just because I was meaning, I forgot to manage my money management. It says that if you have taken a win, okay, you have to increase your uh, increase your risk. Okay, so I was taking a risk of $25. Okay, then now I'll start taking a risk of $40. So it's like, how this is how it will increase. So if I have good like I don't, if I don't have a good confirmation, but I want to be included in that trade, it's $15 loss. If I have confirmation and I'm going to start from very bottom, 25. If I won, then again 40. If I won again, 50. If I won again, then 1%. That's how I'll go. Okay, sorry, 50 and then 0.75, then 1%, right? That's how it will go. So 0.25, 0.4, 0.5, 0.75 and 1%. That's how I'll increase my risk. Got it? Let's get back to the session once again. Okay, so let's start the session. I hope everything's visible, audible, right? Although there are no chat, but it's fine. I have started streaming on 4K. Okay, because I have good internet connection. Also, if you see, I have changed my mic setup. Just give me a couple of seconds. Okay. Oh, my PC is not even hitting even for streaming at like 4K. So 2022 GBP USD. Now let's just revise what we are trying to do. Okay, so this is what it's 5:30, right? And this is what 12:30. Let's mark it on the other day of 12:30. Here it is, and 5:30. Okay, yeah, here it is now. So these are the time. 12:30 is Indian Standard Time, is the time when the London session starts. 5:30 is the time when the New York session starts. Okay, according to Indian Standard Time. Okay, 5:30 p.m. 12:30 p.m. Got it? Now again, top to down analysis we are going to do. So let's go on 1 day time frame. Okay, let's give it a save. Now what can I do? What can I do? Yeah, here we are. No, okay, let me just erase all drawings. So this is how the things are going to look like. Okay, well, I could see there's a sharp decline in this price. Okay, but there is no reach for the price to come back to this equilibrium point. I hope you guys can see, this is the, there is a big fair value gap. There's a sharp decline in the price. Okay, see, the price went down, went back up again. So price went down, equilibrium. Got it? It again went down and little bit up, then again went down. So the price has not reached the equilibrium. I want the price to reach to an equilibrium. Okay, that is the moment I'll expect, okay, now something is actually moving through analytics. Okay, now let's start and let's get the lipstick on this chart. Now here we are. So we are in a higher time frame fair value gap, right? On this 1 day time frame, fair value gap has created, market went up. See, this was the gyration where we were having losses. Okay, so because there was no movement, I hope you guys can see these losses, these 2 3 losses, these 10 10 10 10 10 all losses. Okay, so these are the moments because the market was not giving us any kind of moments. Okay, it was in consolidation for a very long time. Okay, so you guys can see always the retailer stuff always works in opposite direction. Okay, now let me just see what is going to happen. Okay, uh, the price should come back to its equilibrium point. Got it? Okay, this is high. I might have drawn it because of some reason. Okay, somehow I want the price to make what you call it, a bottom and then reach to the equilibrium, right? Okay, but let's see what it is trying to do. So this was the Monday trading, this was Tuesday trading. If I want the market to go higher, right? Okay, Monday, Tuesdays are the best way to produce manipulation, and then on Wednesday, Thursday they can produce the price in the direction in whichever direction they want. For an example, let's go on the weekly time frame and see and analyze what is about to happen. Okay, now weekly analysis is, it's not trying to give us any kind of thing. Okay, so there's just two bottoms in here, right? This low in here, this low in here. So it is coming out to take out this low, but this high was not taken. It means the price is still bearish on 1 day time frame. That's how it's look like. Okay, this is the fair value gap on 4-hour time frame. I hope my voice is still audible, right? I've kept the market, this particular mic, a little away from myself. Okay, fine, let me. Okay, let's see 4-hour time frame. Let me just get this lipstick on by yeah, here it is. Now these red things are not taken. This fair value gap is just touched. Here it is also touched. The market respected this fair value gap, then again inverted the fair value back. Okay, got it. Then went back again to okay, then went down. Got it. If the price doesn't want to reach to this equilibrium point, okay, so see if the price started downward trend from here, somewhere over here. Okay, if it's trying to take a support from this point, the price should at least rally to this point. Okay, if not inversion, at least it should rally to this point. But it is not trying to give us any confirmation according to this price swing. Yeah, we are on 4 hour, right? So the price comes back to this at a particular 0.5 level. Okay, so this is the equilibrium point. So here's the equilibrium point. Now the price, see, trend line, breakout, then manipulation. Okay, so accumulation, manipulation, distribution, that's it. That is what is happening. Okay, now this is the 0.5% equilibrium. Okay, by the way, I'll post my analysis at 12:30 p.m. IST Indian Standard Time. Okay, make sure to watch it as well. There's one pre-market analysis I have started and one post-market analysis I have started. Okay, now okay, I don't know why these fair value gaps are there, but let's go on 1 hour time frame. Okay, so 1 hour time frame, can I see something? Okay, the fair value gaps are respected, right? If the fair value gaps are being respected, it means the market is bearish. Okay, and if the prices swing downwards, I want the price to come back to this equilibrium point. Okay, is there any reason for the price to come back to that equilibrium point? Yes, it is. It went down, equilibrium, it went down, equilibrium, it went down, it hasn't reached the equilibrium yet, right? Let me just let the market trade till 12:30 and see what is actually happening. Okay, let it trade. So on 15 minutes. For every session, it takes some time for me to analyze from 1 day, 4 hour, 1 hour, and then we'll start the session because it doesn't create any flow. Let the market gyrate to that point. So here we are. Let's try to analyze the buy side and sell side liquidities. The buy side liquidity, it was taken a little bit. Got it. It was taken a little bit, right? This is the buy side liquidity. Okay, here is the sell side liquidity. Sell side liquidity, right? So we can expect the sell side liquidity to be starting from here. And also one sell side liquidity as well in here. Okay, let's see what the market is trying to take first. Okay, and show us any kind of movement, right? So sell side liquidities are taken first. What it means, if the sell side liquidities are taken first, is the market wanting to go lower? Because if I see the market from this point to this point, well, it has reached the equilibrium. If we see this price swing, it has reached the equilibrium, right? So in every price swing, is it reaching equilibrium? Somewhere this pricing has also reached the equilibrium. Okay. Yeah. Chat rate is 2. If chat rate is 2, nobody has written anything in chat, but still chat rate is 2. Oh. Let me guys just check for a while. Okay. Right now live. We are on day 10, right? Yes. Chat rate is 2, but I can't see nobody. Let me see. Just a second. Let me just switch my accounts. Okay, just a second, guys. Okay, I'm live right now. Okay, 2 people are watching, but nobody is there. If somebody is in this session, okay, right? Chat rate is 6. I can't see nobody. How can the chat rate be 6? Maybe it's somebody who I have hidden is trying to write something. Okay, so the average view duration is what? 12 minutes, right? If I see somebody giving a chat, I'll reply, but chat rate is 6, concurrent viewers is 1. Fine, let it be. Okay, so this buy side was taken a little bit, right? The price swing back to that point, reaching a equilibrium point. Okay, we can expect for the price to go back lower, right? But how much lower? Think about this thing. How much lower? So the price right now is at this point. This is fair value gap which has been touched. Good. Okay, what I can do, I can mark this fair value gap. So this fair value gap was respected. Okay, so in this session the fair value gap was respected. Okay, the price is right now at this point. We can expect the market to at least come back. Let's see what it's trying to do. I can't find any kind of real movement, like really a good bias. The market is not dumb clear to me. Okay, it's been how much time? It's been 40 minutes. I have not taken any trade, but fine. Okay, we can at least anticipate a trade below this point. If the target is there, we can expect a trade below this point. Or this is the fair value gap through which where the price could reach. Okay, this is a fair value gap that was respected. If this fair value gap gets broken, okay, then I have no what you call it, 2170. Okay, so 2170, is there any fair value gap near at this point? So this fair value gap is somehow inverted, right? Let me mark this fair value gap. This is 1, this is 2, right? So the price was about to invert this fair value gap, but it is gyrating between this fair value gap. Okay, let's see what the price is trying to do. If the price goes below this, let me mark this. This is a long-term fair value gap. We are on 15-minute time frame. It is a 15-minute time frame long-term fair value gap. Okay. Now the market has broken its sell side liquidities. Okay, let's see what it's trying to do. I'll wait for any kind of confirmation. Change in the state of delivery. So this low didn't got broken. Okay, remember this thing. It has not been broken yet. Let's see if it gets broken or not. Okay, this low gets broken, right? If the market come back to that change in state of delivery point, okay, I don't think it will come back. I want it to come back to the change. At least this point it should come. Let's see it on a smaller time frame. Okay, so when the market broke this point, it didn't came back or didn't show me any kind of price movement that I am confident upon. The price is going into the below fair value gap. Good. Let's see if this fair value gap gets respected or not. Okay, so today it's like Wednesday of the time we are trading on. Okay, and let's see what is about to happen. Is the price going to invert or not? Because this is the fair value gap. If the price has did this swing, okay, swing downwards, at least the price should reach to the equilibrium of this thing, right? So somewhere over at this point, somewhere near to this high, it should reach to this high. Then we can expect a lower prices. Is there anything on 1 minute or 1 minute time frame? 1.2170. Okay, so the price has been here. Okay, right, there's a fair value gap in here as well, and there is a change in structure of delivery. I hope you guys could see this. This is the change in the structure of delivery. Okay, now what I expect from this movement higher to this movement lower. At least the price should reach to this point. Okay, somewhere at this point it should take, so these heights should be taken. This is the equilibrium point, right? Before the market started at 5:30, it started going lower and then it started going higher, and again went back low. Oh no, I have got two entries but I didn't saw these entries. Okay, because the market I gyrated it too fast. But yeah, if I could have taken my entry over here, then that is fine, right? So let's see what it's trying to show over here. I told you that it will just touch the fair value gap and then it will come back. Let's see how it looks like on 5 minute 15-minute time frame. Okay, so on a 15-minute time frame it looks something like this. So this, I hope you know this is a fair value gap. Okay, and this is a long-term fair value gap. The price should reverse from this point. Okay, this particular fair value gap, you guys can see this fair value gap. Let me release these lines. It's hard to go back in time and then record that thing. Okay, so now I want the price to go back to this point. Okay, so yeah, what's the time right now? It's somewhere around 6 p.m. is the time. Okay, I mean I want to see some kind of, is there any kind of reversal or something? Okay, let's see what happens. So is there any fair value gap? Yes, we can see a fair value gap in here. So the price has touched this fair value gap. The chances of the price to come back to this fair value gap has again increased, and at least this low, this high will be taken, right? It is taken? No, it's not taken. It's exactly at that point. You guys can see, right? This point and this point. What the hell? What it is trying to do, man? Okay, so here we can expect a change in the structure of delivery. If the price comes back to this point, I can put a high there and then expect the price to go lower to this point. Okay, the time right now is what? 6:48. Fine. I want the price to come back to this point. Okay. Okay, it has touched this point. Let me just rewind the point a little bit. Okay, and here's my entry. Okay, here's my stop loss. Right, there's a fair value gap which has just been touched, and the price come back to that point. We'll see it later. Okay, so we can expect this low. This is the lowest low. I don't think this will be taken, but the confirmation of this low to be taken is like highest. So let's put open position, market sell, market order. Okay, and what do you call it? Sell, market order. I am selling market order. Current balance, yes. Risk reward is, see, I'm going to take a $40 of loss. Should I take $40 of loss? Fine. Sorry, I am taking a loss of 0.4%. Okay, if I just lose this trade, then fine, I'll get back to the loss of 0.27 again, to 0.25 again. Nah, it gets taken. Now I don't want it to return to that thing. See, okay, there was a fair value gap in here as well. The price should have returned to this point. Okay, this fair value gap has been touched. Market structure break. Oh no. Now it's going lower. If it provides me any kind of low risk entry, I'll take it. But what's the time right now? It's 7:42. 7:30, it's done. Shit, though, this low is that my target, right? I could have been patient and could have taken entry here. Okay, I put my stop loss at this point, which is not good. Okay, because there's a good fair value gap which is touched, and obviously the price will come back to that point. I thought of this thing in my mind, but I couldn't recall it. Okay, now we are $40 loss. Again, back to 2.25% of loss again. Okay, the low gets taken. That's it. Again gets taken. Okay. See, I am not able to take a good entry at this point, so my entry was wrong. Okay, what I expected in this particular upside candles as a change in structure of delivery, this is wrong. This would be somewhere the change in the structure of delivery. Okay, so I can expect this is not the change in structure of delivery. Okay, this is the change in the structure of delivery. Okay, so this is change in the structure of delivery. That's it. Okay, good, fine. By the way, it is respected, right? You guys can see how it is getting respected. My entry was not good. Otherwise, if I would have taken an entry over at this point, somewhere like place my stop loss here, stop loss at this point, okay, and my target somewhere after this thing, 3 point more than like $120 or something, I would have gained. But it's okay, right? We'll have a lot of trades. No need to run behind the trades. Let me mark the 1230 points again. I just love my PC. It's streaming at 4K. Okay, and still it's not showing on me. Why it's not showing price further? Am I able to say something? Oh, it's saving. It's fine. Then why it's not showing many time? Okay, let's come back to that point. Okay, 1 minute. Let's go on 5 minute. I can see now. The simple, some errors are there. That's it. So these are the equal lows that you guys can take. This low is not taken out by this low, so these are the equal lows that have been created. So this is now the drawn liquidity. Okay, I told you when the price is going to swing back, it is going to reach to a fair value gap, and this is the highest fair value gap that we can find. So it touched that fair value gap, that is, and then it returned. Okay, so we'll see if this fair value gap gets ran through. Okay, let's start. 3 minutes. Go ahead. Hmm. It is respecting that fair value gap. Remind this point. Okay. Now let's see what is going to happen. This is the draw on liquidity which I am trying to find. Okay. This will be the draw on liquidity. This point and obviously this point. Okay. Now I'll wait for the market to show me some kind of when before the market started it took out buy stops. Okay, these are the highs that have not been taken yet. Okay, if these highs get taken, I'll have more confirmation. Okay, on what the price wants to do. Okay. So it was generating buy side liquidity. Still the buy side liquidity is not taken out. Okay, now this buy side liquidity is taken out. Okay, fine. If these buy side liquidities are taken out, then I'll anticipate for these particular lows to be taken out, and ultimately these lows to be taken out. Ultimately these lows, this low is near, so that obviously all of them will be taken out, because I could see a good momentum, right? The price is at right now 140, so yeah, we are still in the London kill zone. Okay, let's go on a smaller time frame. Okay, so you guys can see this is the fair value gap that has been created. I want it to get inverted. Okay, this fair value gap is it enough to enter this place? Should I request for this thing? There's a fair value gap in here as well. I think this is the fair value gap that should be respected. Fine. If I put my entry over here, not this thing. Okay. Short position. Let's keep it at this point. This low to be the target. So open position, right? Why am I not able to click this? Fuck it, yaar. Again, not. I don't want to miss any entry. Okay, fine. Okay, it's not able to take any trade. Open position. I want to sell. I'm gonna do market. Current balance, not 2.5. I'm gonna do 0.25. Okay. Damn, yeah. What's the time right now? It's 2 a.m. right? 2 p.m. So I want the market after 2 p.m. I want the market to go back to this point. Okay, that's it. 2 p.m. is the time. Okay, let's see what is going to happen. Let me just reload it once again. Bro, I am a human. What are you even trying to do? Okay. I was waiting for what? I was waiting for 2 p.m. right? Let's load the layout. Okay, fine. Here we are. Oh, at least it didn't, Let me just save it. and I'll wait for the market, just to give me some confirmation. Ta-da, 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 ta-da. So here's the market right now, okay, and what we could expect. This was a change in the structure of delivery. Price went back again. This value gap is inverted. We can anticipate an entry downwards, right? And we can take an entry. Put my stop loss at this point. Okay, got it. Because now you can see the buy stops have been taken, right? This buy stop got taken. That's it. And there's a fair value gap might be here that the price that push the price downwards. Okay. Now the target should be this low and this low should be the target. Should be my target. Okay. Let's see. Are we lucky or are we not? Open position, sell, market, current balance. It's place trade. Okay, got it. And let's start. Hey, stop, man. I'm taken out. Fine. Again, we are back $842. So let's follow the money management, and we are following the money management according to this. What we should do, we should now increase our the risk appetite, and I'm going to increase my risk appetite back to 40% and see. Sorry, not 40%. 40% is too much. 0.4%. Okay. So we'll discuss about this thing. Okay, and let's see where we are going to reach. So our trade is finished in the London session. So no trades in the London session. That is finished. That is okay. Bye, tata. Nice day. Okay. See, we are seeing that this particular low has not been taken yet, right? I hope you guys can see this. Now, if this low has not been taken yet, then might be that this low is taken into what? This particular London session, right? Oh, sorry, New York session. Got it? Okay. That is what could happen. Are you sure about this, Ritik? You really sure about this? Yes, I'm sure about this. So now equal lows have been created. Let's see, is it going to be taken now? Because if the, as soon as the distances between those equal lows are increasing, the time after which that low is going to be taken also increases. So this low was at recent times, like just yesterday. So it got taken, and it's very good drawn liquidity, right? Okay, guys. Now let's just keep moving. Okay, let's keep moving to the five. Not gonna see any entry at before 5:30. Yeah, I don't want it to be taken. Okay, it is generating a buy side liquidity. You guys can see this is trying to generate some kind of buy side liquidity over and over and over again. Oh, but it's also eating the buy side liquidity. Fine. So here we are. Let's just stop. Okay. So what it is trying to do? Is there any fair value gap that it is trying to just take on? Okay. Start invest your money. No, bro. I'm broke. Okay. Now the clear drawn liquidity that we could see is this point. A. And obviously we could see at this point. Okay. What's the time right now? Today is Thursday, and tomorrow is very less a chance to take a trade. And these are the equal lows that have been created. Okay. Now that might be taken, might not be taken, but yeah, the strong drawn liquidity is at this point. I'll just delete this thing. No, I should not delete, because it is also the zone where the price is getting respected. So it has generated sell side liquidity, and it is just eating buy side liquidities. Okay, with this movement. Okay. Now what we could anticipate when there is a market change, we could just put out our entry there, and we can target this particular low. Okay, the draw on liquidity to be that point. See, we have gained around, what for the last trade, let's see how much we have gained. We've got $88. Okay, so we can risk half of this thing, because we need to follow the money management. I guess I should take a trade of 40.4%. Okay, let's see what is happening. Okay, so one candle. Okay, let it take. Okay, so now the last buy side liquidity gets taken before the market started. It has started rallying upwards. It means it wants to rally downwards. Okay, so I think there's some kind of FOMCs there. Should I trade or not? let it be, bro. It is just going away from my directions. Okay, so I told you that when the lows are actually created with very long distances between them, it means, see, this low was on what? This low was nearly on 8 March. This low is on what? This is on 9. Hey, this is just 1 day gap. Okay, fine. But yeah, the buy side liquidity has been taken. Okay, so these buy side liquidity, and even these buy side liquidity has been taken. I think the price wants to reach back to this particular point. This fairly gap. I think the market wants to reach to. Let me just extend these things. Friday is the time where we don't want to trade. Okay, so this particular fair gap, I think that is inverted right now. Okay, let's see what it is trying to show us before the market started. Okay, rejection is being taken place, right? I can't see any change in the structure of delivery. Bro, show me something fall. Okay, you're on a fall. What do I even expect at this point? I can't see any no fair value gap that has been created. And okay, wait. Change in the structure of delivery is at this point or not? So this down, change in structure of delivery, we can anticipate an entry. But well, as far as I feel, this high has been taken out with this high. Should I go with 0.4% loss? I've already won this thing, and I don't think I will taking much loss. So I'll just take $30 loss. That is like fine for me. I don't want to lose much on my $80 of the profit which I made just right now. Okay, so let's not go hard, because if if the market wants to go downward, then obviously we have got a long risk to reward. 30 is normal. 33 I'll take this time. This time 33. Okay, I know it's a very odd number. Okay, fuck. Battery. Damn. Now the price is again back to the change in the structure of delivery. We could put a stop loss over at this point. Okay, and we can anticipate this particular sell side liquidity. See, this is the buy side liquidity that have been taken when the market start to rally in the. But also I need to see the time. This time right now is 19:08. It means it is under 7:30. Okay, 7:30 p.m. is when the kill zone of the New York ends. So it is in the kill zone. We can take an entry. Good. Now what can I expect? $30 is like, let me just see the risk reward ratio, what I'm getting as a risk reward ratio. Okay, so this is the point. If I keep a target at this point, okay, stop loss at this high, right, and maybe like targeting this low. This is like 4:6 risk to reward ratio. I don't know if it's like okay, but now let's take an entry, open position. I'll be selling, I'll doing a market current wellness. No, I want to take $33 of loss. Okay, and that is fine for me. See, this is just a little variative thing that I'm not fixed on particular money management, because how the confirmation of trade is actually varying with the setup, and also I'm not enough experienced to know that actually is it going to form or not. Okay, well, let's see. Just let this thing play out. Fine, it has got taken me out. Fine, that is the reason I don't want to take anything else. Okay, so this high wasn't taken that much. Now this high has been taken. Let's see it is what it's trying to do. We don't have anything else to be taken. But also I could see there is no fair value gap that has been created. Fair value gap with this change in the structure of delivery, I think it is going to provide me more context about the price. But anyways, we are up $806. Okay, and that is the point where we started from. Fine, it's okay. Even if we don't do anything and still the price is going on at the middle thing, it's fine for me. Okay, I don't think there's any significance for this fair value gap or this fair value gap. Okay, I'll just delete those things. Now the real significance is of the higher time frame fair value gap. It has been Thursday. Obviously, the market will start to rally in the opposite direction, or like in the exact direction. What do you think, guys? So these are the equal lows that have been created. Now our draw on liquidity is on this point. Okay, so this red point shows us the draw on liquidity. Go on a 15-minute time frame to see what is actually happening. Okay, why is there okay, this zone, this is the fair value gap of the last time. Okay, so this is bigger time frame fair value gap. Okay, Let me extend this thing on this point. Okay, anything else? So this is an inverted fair value gap. It can come back to this point and then rally downwards according to this thing. Okay, because this fair value gap, I hope you guys can see this value gap is now inverted. Okay, now let's assume what is going to happen. Let me have some water. Okay, now let's see what is about to happen. We'll wait for the next day till 13:5:30. Sorry, 17:30. And what's the time right now? By the way, the time right now is 8:15. Is it going to show us any kind of entry or not? We can see. Can you guys see? There's a fair value gap in here, and there's a fair value gap in here. Okay. So these two fair value gaps are the point which can actually vary the price. So I'll just put one of these lines at this point. Okay. See, there are one fair value gap and this two fair value gap. We are going to take both of them. Okay. So yeah, this is the zone where it should reverse to. Okay. Got it. If it reverses to that point, then we can anticipate any kind of entry. Okay. Well, see. Let's see what happens. Okay. I'll see you on 1 minute. It didn't even break the point. So here's the point where it broke down. But now it has broken down this point. And am I missing this? Is there any point of taking this trade? No, because it just directly went down. These are the lows that have been taken. Directly went down. There's no price movement that I could expect from here. Got it. Okay. Okay. There's no point I could take this trade. Damn, all of the lows are taken. Such a nice price movement. But I don't think there is any chance for us to take this particular thing because we don't have any kind of confirmation, right? There's no confirmation of this thing to be taken. The only thing is that most of the times you guys can see whenever these like great price movements happen, this white colored, it created a fair value gap. Okay, and then it broke down. It came back to this again. This fair value gap is now inverted. Okay, that might have been the reason for the price to go back to this point. Okay, this could be one of the entries. Okay, but it's fine. Let's see. No, I can't do anything. I'll just play out. Let the price play out what it wants to do. The speed with which it went down. You can the purchase made on your credit card or see it 89. Okay. Let's just wait for the next day. We can't do anything or we can't help anything to wait for the next day. Oh, it is generating a buy side liquidity and also sell side liquidity is taken, but it has generated some kind of liquidity. Okay. Let's see which one of them gets taken first. So when the market has started, right, so I hope you guys can see this liquidity, right? This is a red point, and this is one of the points that it can reach. But also in the summer time frame, we have some little consolidations as well. You guys can see this is the high, okay, and this is the low point, right? Yes or no? Yes, this is low, and this low not taken, this low has not been taken. The price is swinging down. See, the price went up, equilibrium. If the price went down, it should reach to equilibrium. Somewhere the price should do this thing. This is the point where the momentum has started. Okay, so you guys can see the price downward swing. The momentum should at least take the price. Wait. Yeah, the momentum should at least take the price to this point. Okay, this particular point. So I think this should be the price. So first buy stop should be taken, then any entry downwards, and then we can anticipate for these lows to be taken. Okay, that's what we could anticipate. Yes, that's what we can think of. Okay, right. Now let me just delete this thing. I'll just put a mark over here. This is 0.5% equilibrium line. Rest and all delete things. Got it. Hey, nice. It reached to that point, but I want some kind of confirmation. Okay, didn't exactly reach the point, but fine. It's fine for me. It should reach to this point, right? Let me see on a 1 minute time frame what is the kind of entity it is trying to form. So buy side liquidity taken, sell side liquidity taken. I'll see what it is trying to do. Oh, and there's a fair value gap we could have entered in here. Let me just rewind the price. We didn't saw it on. Okay. Now there is what, a fair value gap. This fair value gap has been touched. Okay. Now I want the price to come back to that point. Then expect it to go lower. Okay. Obviously not much risk of a trade. Okay. Stop loss is very less, so I'll expect it to be not of that much intensity. Which price should I take? I think downward swing, downward equilibrium, downward equilibrium never. So I think I should take this equilibrium. Is according to this equilibrium, is the price swinging nice or not? Oh, it did 62% retracement as well. Let us just wait for the price to come back to this point, and then we can anticipate any entry. Wait, I'll just rewind the price and put my open position as I sell side. This is the point. This is my stop loss. Okay. Yeah, fine. Now what is the, see, this is the thing which I am expecting to be taken. Okay, because these lows are somewhere, it's taken, it's not properly taken. There's just one dip of this thing. So the okay, I could just shift it right over here. You guys can see equal lows are there. Then if I match this with the external time frame, then we can get a really good entry. Okay, that's what we could expect. But now let's see what kind of entry are going to be formed. So sell market again, 5% of the risk, place trade. Nice. What is this equal lines? Okay, buy side liquidity is also there, sell side liquidity is also there. Now no trade, I guess. 779. Okay, continuous two losses are there. I'll now decrease my risk a little bit more. Okay, I don't want to be in drawdown. Just a second, guys. So there's no point of this the price coming back to this fair value gap because what? Again, sell side liquidity created. Oh, this is taken. Anyway, it's Friday. Okay, now the Friday is going to end. I'll not look for that much of entries. But here is some change in the structure of delivery, right? Sorry. I'll remind the price to here. Okay. So the price did a swing downward, and okay, the change in the structure of delivery is there with the fair value gap. Fine. You guys can see, right? Change in the structure of delivery with the fair value gap. Got it. Now we are going to enter there. Put my stop loss at this high. So one on the sell side that is being generated, another sell side which is being generated. I can anticipate for it to move till this point. Okay. Is it in the kill zone or not? 15:30, just after minutes of the kill zone. But let's see. Sell market now. Obviously 2.5 will be too much. So yeah, 1.5 place trade. Okay, fine. Now we are $840. Fine up. Got it. Okay, is there any fair value gap? Okay, done. Equilibrium done. Equilibrium done. Equilibrium. Okay. Then here's the fair value gap that has been created. Okay. We can still expect the market to go lower. Now we can take a greater risk than the previous one, obviously. So 5:30 has not been reached. So 1 minute. Here is a change in the structure of delivery. Okay. But wait. There's one thing. So these buy side liquidities have been created so nicely. Why am I going to take one sell trade again? But this is the reason because this particular thing has not been taken yet. Okay. So yeah, buy side liquidity has been created, but this sell side is there, long term sell side, strong sell side, which has not been taken yet, and I want it to be taken at least. We can take a low risk entry. Okay. Just at this point, when near, put my high at this point, stop loss at this point. Okay, and target at this point. Now I'll take it, open position, sell market. Current balance, no, I want to take it to be okay. 0.5 is enough, right? Because I'm not that much convicted about this thing. Fine, and got taken. This is the time when the market is really dumb clear to itself that what it wants to do. Okay. Okay, so now the pricing back, equilibrium, also changing the structure of delivery. We can anticipate for the price to come back, but obviously, we don't know where to put our stop losses. Okay, it has reached this point or not. Okay, this fair value gap has not been reached, but yeah, we can see that there's one change in the structure of delivery, right? Again, these micro things. Got it. Let the price go back to this point. Okay, yeah. So I'll put an entry over here. Change in the structure of delivery. I'll put a limit, right? If it gets taken, it gets taken. If it doesn't get taken, I don't care. Got it. So okay, right. Now let's start. This is the point where it should be taken, and yeah, this is the high. At least this should be the high. This should be the stop loss. Okay, because after the market started rally upward, it's going to be downward. Open position, I'll be selling market, then 0.15, then fine, its current balance, okay, then place trade. No, 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 no. What it is trying to do? It is trying to manipulate the market into thing. Okay, it gets taken, fine. Not a big deal. Okay, we are 874. We have gained like 1% nearly about that this in this particular scenario. 5% is the trade. Okay, so it's right now what time? It's before 8:44. Is there anything? And okay, we can anticipate. See, this is the buy sell liquidity that has been created since all the price that went down. Obviously, it will be taken. Okay, so and also this low is not taken. See how perfect it is. So it is trying to generate the liquidity as well as it is trying to take the liquidity as well. Okay, so I expect for the market to show me some. Okay, this is the point where it showed me some kind of reversal or not. There's a fair value gap. Okay, a lot of fair value gap has been reversed. If this fair value gap gets reversed, then there is a good entry, but I'm going to take a risky entry over here. This low is being taken by this low, then we can anticipate an entry somewhere over here. Okay, so let it be. Mark at this point. This is change in the structure of delivery. Okay, and then this will be the stop loss and target. I should reach for this high is fine, right? I guess yes, this high is fine. So wait. Is there anything we could do? What is the risk amount? Current balance 0.15, placed it. La 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 la. There might be some kind of FOMC which is there. Okay, so that is the reason it has taken out that thing. Now I won't think of any kind of entry. That's it. Was obviously going to be taken, but I couldn't save it. So might be because there is some kind of news that is going to be happening over at this point. Okay, if I was in real time, I wouldn't have been taking the trade because of the news is okay, because FOMC is there. I'll just wait for the market. It'll take out both of the sell side liquidities and buy side liquidity, and then it would have gone in the direction where it wants to go. Okay, but it's fine, right? It's fine. Okay. It has okay, fine. La 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 la. Wait. Fine. I'm not gonna take a trade because it's just auto. It's Friday. Okay, and okay. Next week is what we have done. What data till 10th March we have done. Okay, we are on day 10, and 10 hours of data backtesting we have done, and we'll be doing more and more backtesting as soon as we can do. Okay, I sometimes take these trades, these backtesting sessions early so that I can get everything. Okay. Now, okay, let's see. Let's get back to another point. Okay, let me just save this thing. Okay, another day 12:30. La 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 la. 15-minute time frame. Okay, this is what. This is Monday, 12:30. This is 14 March 5:30. Okay, 17:30. Sorry, yeah. I think I should end the session over here because it's been. I'm just getting exhausted. Okay, so my limit is like I can do 1 hour of backtesting. I wanted to do 2 hours or 3 hours of backtesting straightforward, but this is my productive limit. If I just go beyond of this limit, okay, I will not be that much productive, and I will not be of that much energy. So I'll be ending my session over here. Okay, then that is it. We are up 858 again, $58 up since the last time. Okay, 0.6%. just keep doing these small trades. We will be trying to analyze our bad trades, and then we'll be try. Why am I stuttering? But it's fine. Okay, that's it. Take care. See ya. Bye bye, and have a nice day. Just keep backtesting, keep trading, and let me just roll the disclaimer. Bye, guys.